The view only for educational and informational purposes. Do not regard any statements in this video as a recommendation to buy or sell any financial instrument. Investing comes with risk to loss of principal. Always conduct your own research and seek guidance from a professional investment advisor. I am not a professional advisor. I am Dollar Will. I've been having some computer issues today. I couldn't get this thing started like I wanted to. I don't know what the heck is on. I think it's a StreamYard issue. I've seen other people have the same problem, and now it's happened to me. I'm gonna have a little lag in the screen draw. I'm gonna lay this down anyway, and then get back to my exercise and watching the markers. Um, let's see. I just got a little message from brother on crypto with Lionel. He says, "Do I see this market declining?" He doesn't know that I'm live right now on YouTube. Since nobody's here with me right now, let me go on and send this. I'm gonna send this message um, to Lionel. Maybe he'll come through. But I'm gonna try to lay this down, and let me give brother Lionel an invite if he wants to, or at least get it. I'll get it ready. I'll get it ready. Maybe he wants to hop on, maybe not. But I was trying to beat the decline. Y'all see. I see this dive happen. So yeah, I saw it. I've been looking at it a lot, and I kind of this this was a frustrating sideways move, a sideways channel we see. Let me set it up now. Now I'm gonna give you guys my attention. I apologize for everybody that's watching the playback. Nobody's in this live room, but I should have been, should be mindful about people watching the playback. So here we go. I don't know how this is gonna work with this dang slowness going on in the screen draw. So what we got here, this is January. This is the low from December. I'm having some issues where you see this hand, the hand icon. Instead of looking for the hand, look at the cross of the crosshairs. That will be pretty much what I'm talking about. So we had this low in June 16th, and then we had this rise. I'm not trying not to go too much in the Elliott wave theory. I talk about that on my Patreon. I'm gonna keep this light, technical analysis light. Okay, I'm not gonna go too far in these oscillators explaining that either. I do that on the Patreon. They're very helpful. When you hear people say, "I don't use no oscillators," don't confuse that with the fact that they don't use the oscillators doesn't mean A, that they don't have a use, and B, that knowing how to use them isn't helpful. Knowing how to use them is extremely helpful. Um, anyway, so we have this decline here. It really picked up speed right here. on June 9th, and we retrace back up to that area. Um, it made a typical Elliott wave pattern on the way up, a little extended, a little atypical in terms of how much it extended, but it's got the right shape that we look for nonetheless. And the rule, very elementary rule in trading, is that downtrends make lower lows and lower highs. And so we're talking about the big ends of the move, the extremes of the moves, down, up, down, up. The big, not the inside squiggles, the extremes, the outline. Okay, and we're looking at a daily chart. And so it made a high, it made a lower high, it made another lower high, and this high failed to take out that high. So as long as that continues, we're in trouble. Um, if it goes higher, that doesn't mean you're out of the woods, but that it's a good first step, okay? Because the second step is that the low that the rise originated from would have to hold. So the first hope would be, okay, make a higher high, and then don't make a lower low. At least don't take out the extreme low. Well, at this point, we haven't even made the higher high. But if you notice, my video announcement came up early. Something as early as like 9:40. Okay. Because I saw something on the charts as early as like 7:30, 7 a.m. this morning when I went on Patreon and made a special video and going a little deeper into the technicals. I'm not going to discuss every aspect of what I've seen here, but there is a very common pattern called head and shoulders. And okay, got Brother Lionel. Uh,
Hello,
what's happening? What's happening, brother? Ain't nobody over here. We can't get them numbers, man. I had to get me some Instagram twerkers, but I just wanted to throw this chart up and just keep it, a little light on the technicals. I'm not going to go too much into Elliott wave theory. Just talk about some basic uh, price action and lower highs of this structure. And the fact that we didn't take out this high and how it looks like, I'm gonna go here. This part looks like a head and shoulders, but the main part here, can you hear me like that?
yeah.
Yeah, the main part here didn't take out the high. But what everybody really, really has to watch for is this trend line. Let's just keep it basic, grade school level. Learn some basic technical analysis. You can teach your kids that can mark up the charts for you. They know the difference between, if they know how to connect dots, okay, connect lows, or if they know the difference between a diagonal line or sideways line or a horizontal that goes straight across, you can begin to have your child learn to look at charts and look at levels. And but this is what we're looking at today. This is the big deal. What's going to happen here? Okay, this little green candle that's what's been happening today. Okay, every candle is a day. And I'm gonna come down a little more. Get into a little what I like to call chart art. Little chart art. I don't know how far I'm gonna be able to do it because the delay it's been kind of slow on StreamYard. You can see right here we had a sideways move. We call this consolidation. And it's got a kind of a triangle kind of look to it. Or I would say more or less like a descending wedge. It's kind of flat across the bottom, but like this across the top. A little slope at the top. Let's call that the scene of the crime. That's where everybody abandoned the market, and caused the price to decline. It's not really. It's really straight across. But I'll go with this. So we kind of come back to that general area where everybody threw in the towel, and the price is more or less in kind of struggle mode. We'll see if it can uh, go higher than that. So if you're on the bullish side of this market, you need the price to clear this. Again, it wouldn't mean that you're out of the woods, but it would be a good first step. In the bigger picture, um, what's of concern is in my previous videos, I announced that I didn't think that this was the quote unquote hell trade. After looking at it further over the weekend, I changed my position. This is hell. There's some, if there's some chart patterns and stuff I saw. I looked at a more complete data set, and I saw that I was making a mistake about what this is. Okay, I made a mistake. I was considering this part of a whole new structure going higher. In fact, no, this is the end of a structure that started in 1932. A wage structure that started and after the quote unquote Great Depression, and this was the end of it. So when you hear people talking about the gloom and doom, if they're a technical trader, they more than likely belong to some type of school of thought that looks at big data samples across decades and even centuries. Okay, and so if you go back to 1932, America wasn't it wasn't the power that it is now. Okay, we came to power after that. Pretty much. The rise after the Great Depression really put America on the map. But it looks here like we are going to get another swing down. And this area is what I pointed to in my past video. I said if we can stay above this area, then that would be a positive thing. There would be at least an argument could be made technically that it could go higher, even higher than this. Um, in general, I guess you can say if you're trying to hang on for a thread of hope, you should need to keep your eye on this low here on the 9th, September the 9th. So we're talking about almost a year ago. You need to hold that low. But I think we're gonna go right through it. Okay. I think we're gonna go through it, and then we could get a rise, not come higher than where we are now, and then keep falling. This is by the time we reach this level, and we eventually will. This will have taken out the entire run since um, March of 2020. But by that point, this is why it helps the chart, because by the time we get down to here, that's when a lot of people are going to throw in the towel. But I believe when we take this out, we're going to be set up for a pretty significant, I don't want to say reversal. Let me say a big retrace, a big give back, and then continue. So this thing could go a while, but for the immediate, I think that everybody should just pay attention to this. You know, neither I nor Lionel are financial advisors. We're just some folks on YouTube sharing our technical opinion. You speak to your own advisor, professional advisors, and get your own, develop your own opinion about what's going on. So let me look at the weekly chart for a second. Okay. All right. Um, what say you, Lionel? You think this is it? Lionel, I have to say he was always in the hell camp. But this is hell, and we've been theoretically battling it out. battling fear, ideologically battling it out. We have like a little round table every weekend on the Patreon. We go deep. We deep dive into technicals and explain stuff as we go for the new folks. We've been known to go 3 hours. Okay, so
Yeah, this is like you said, it's the hell trade, but the significance of this is it's going to hurt a lot of people,
yeah,
and I say that based off these bear market rallies. These bear market rallies are going to seem so great in expansion that it can fool a lot of people. Even now, I'll look at the thumbnails of like a CNBC, and they'll have someone on that is a part of this. They may be the head of this investor fund or some type of hedge fund, and they'll say this is the bottom, like where we
right,
left at in June is the bottom, and the market's going up, and expect to see a plethora of people saying it that are quote unquote experts that called the bottom so many times. Even Michael Saylor of MicroStrategy, he's stepping down as CEO because he bet almost everything on Bitcoin, and Bitcoin is down significantly. And you can see
yeah.
a lot of people step down as CEOs.
I have to pop my collar a little bit, just a little bit on this one. When we Lionel is one of the primary uh, founders of the Black Brain Trust. Okay, and I was a part of that effort, and we discussed Bitcoin. I did technical analysis there. I really kind of neglected this channel here for a long time, um, just because I was so busy on the brain trust. But I remember saying when I was over there, just I'm pointing out here, y'all. This is like a past area of interest. Price likes to return to areas where it either started or ended a trend in the past, because people are psychologically people who actually are in this trade or were in this trade at these points. They uh, typically either got in or got out of the trade in those areas, and there's likely to be a lot of stop losses sitting there and stuff. So the market tends to come back to those areas. So, and it looks like that's what it's doing right now. But back in the brain trust days, I said that one because I was doing forecasting of the market way back. We're talking 2017. So we were talking about this point in time that we're in right now, and I was talking about an epic correction of Great Depression degree of proportion, and nobody else, or I don't know if anybody else that was talking about it back at that time. And you can look on a brain trust and go back to 2017, 2018, and you can find me talking about it. And I said one of the signs is because we were in IPO mania back then, because
Hmm.
we were in the last thrust of this trend we're in now. Um, and I said you will see all those IPOs go away. That was one. I mean, meaning you won't have all these new IPOs coming on the scene. Nobody even talks about IPOs anymore, because what happens is during the end um, of a major route, a major cycle, companies come online to get the IP in an IPO, because IPOs and stock selling, stock offering in general, from a corporation's perspective, that's a fundraising effort for them. So it's like the last call for alcohol. If you want to get some, you better go put your order in now.
Mm.
And so that's what all the companies was doing. And I remember saying also back in the Brain Trust days, there will be a flurry of CEOs resigning because they know that the macro economy is shifting, and people will blame the last guy or last person in charge for the decline, and they don't want that on their record. And so
Yeah.
you're going to hear big name folks and major corporations step down. Okay.
And we've seen that with Jeff Bezos. He stepped down not too long ago.
Yes, he did. Yes, he did.
Mm.
So nobody's hodling. I got a Bitcoin video I gotta do. It's just kind of I like to pick on the hollers, but it's out of love. It's out of love. Okay, I gotta harass you a little bit to break you out of that habit, because it's just stupid. You've been misinformed. People like to tell lies, like that the smart people hodl. No, they don't. It is the smart rich people who are causing the market to go down, and there is no um, conspiracy. Okay,
Right. Manipulation.
there's no
Our favorite word.
manipulation, right? None of that. It's just you caused it. You manipulated yourself. Okay, because you've had people out here telling you, listen, you better learn technical analysis. There'll never be a time that the truth will be popular. Unfortunately, life is not that way. You cannot look to the majority to find the right thing to do. I know that sounds, pessimistic, but the masses are set up to be slaughtered. There has to be someone to sell this junk to. So you're told to hodl, and you're lied to and told that that's what rich people do, and that's what the winners do. That's not true. The winners learn how to read charts. There's a certain amount of shares normally traded, meaning the people who normally routinely invest in stocks or whatever it is to be invested, they're always in the market. That doesn't mean they're always in that particular stock or asset, but they're always in the market somewhere, somehow. They just rotate the money to a different place. The rest of us who are absent minded that don't invest, we're always out of the market. So there's a usual amount of money that's just kind of flowing around in the market, except like at the end of a big run up in that mania. That's when the folks at the barber shop, and back in the past they would say the shoe shine boy, he would hear about it. The regular common folk, basically the sheep,
The taxi driver.
the taxi driver, they learn about it at the last second, and they see the stock chart going up to the moon, and they go, let me get into that. But that's the exact wrong time to get in. The time to buy is usually at some quiet time when nobody's talking about it.
Right. Well, they don't want it.
They don't want it, but you're set up. There's no conspiracy. um and speaking of Elon Musk, let me just throw him in. That's what I was trying to get to. He sold what, almost $1 billion worth of Bitcoin.
Hmm.
But this I'm gonna get into that on the Bitcoin show, just to show you guys what, the volume spikes and stuff like that, so that trading activity of a certain size is beyond the resources of the common people. We all know anecdotally that the top, maybe 2 to 5%, they own like 90 something percent of the daggone wealth. So we're little peons. We don't have the money to make these stocks or crypto or whatever these asset class you're talking about. We don't have the resources to make things move up and down like this. These are the rich folks, presumably the smart folk, and so that if you accept that is true in your mind, and you also think that hodling is the way to go, then I'll say that you're experiencing cognitive dissonance. Because there's no way you can hold both of those things in your mind and reconcile them. You know. So if you're trying to do like the rich folks do, you better learn, or the smart folks do, or the rich and smart, or whatever. You better learn when to sell. And that's in technical analysis where you learn that. But yeah, it's gonna be rough. It's gonna be rough.
I mean, and this decline can take a very long time.
Yeah, this is different from this is not your grandfather's decline. This is not and despite my voice, I'm a little older. I'm 58. So don't let any older person tell you that they've experienced this before. No, anybody
No,
alive that experienced this before, what we are likely in, they have Alzheimer's, and they have to be some kind of special child because they had to be like 5 years old or something. They were not an adult with any real consciousness, awareness of what was going on. If they were around in 1929, okay, so it's nobody has experienced anything like this. So this time is different. Chris Moe says, I remember I wanted to get some Wendy's stock several years ago, but my money was funny, and I kept taking money out of my investment account, sometimes selling at a loss for a need for cash. Um, yeah, that happens.
that
That
happened a
happens,
lot more now.
right? Oh God, you factor in what people have been going through with this pandemic.
Hmm.
A lot of people are going to be rating the account for cash,
Which will
but
make the market go even down further.
correct, correct. But I think the big fear is that it's the total mindset. This hodl mindset. Go to your financial advisor and ask them how bad could it get. I mean, I'll tell you this much. If it is just my opinion, I would ask my financial advisor, do they know technical analysis? And then if they said no, I would say, do you respect technical analysis? Hopefully, they say yes. Um, okay, and if they say yes, they respect it, but they don't know it, then I would ask them, do they contract for those services? Okay, but if they said no, no, they don't respect it, no, they don't contract for those services, I would run like hell. I would not work with that person. There are excellent financial advisors out there. Uh, there are excellent ones that don't know technical analysis, but they contract for those services. And then there are those who also are certified technical analysts. You know, so market technicians is what they generally call. So you can find them. Okay.
I've seen people on YouTube that say that they don't believe in technical analysis, but they're using Fibonacci on the chart
How about that?
as a
Yeah,
place to buy. Well, I'm going to buy right here because the Fibonacci, but I don't like, I don't believe in technical analysis. It's hocus pocus. But you're using the Fibonacci to identify a place to buy.
right. So they really don't know. They don't know what they don't know. So they sitting there. So that's two things. One, they don't realize that their practice or that the use of that tool, the Fibonacci tool, is a tool for market technicians. And then they say they don't believe in technical analysis. So that means it's a high probability they don't know what the heck they're doing. And as they play around with technical analysis, they don't even know that they're doing it. So I doubt that they know what they're doing. So yeah, it's a little crazy, but yeah, we're going to be bringing you some other stuff as we take this dive. Um, Let me change the to a smaller time frame. See what's going on as we go through these trying times. Just to let you know that the money rotates to different asset classes and different industries. So although it may look like um, everything's red on TV, it's not necessarily so. Okay, they typically, generally, there's always some place to invest somewhere. Some industry is going up. Worst case scenario, if you're buying a bear market fund that's shorting the market, then those funds will be going up. So there's always a way to have your account rise. And aside from that, there's nothing wrong with just sitting on the sideline. you know, getting your money out of stocks. But this is a conversation you should definitely have with your financial advisor. Ask them, what do I do if I see, you know, blood everywhere, blood in the streets everywhere? Again, you've already had asked them the question about their positional technical analysis, and and you know that they either know it or their guidance they're giving you is informed by it. Okay, so that's the big one. So when you ask them, what do I do when let's I keep hearing news that this could be a big correction, and people start mentioning the Great Depression. What should I do? What are my options? And listen carefully and pick the one you're comfortable with. But typically, when markets are tanking, um, your most conservative thing to do is to, in my opinion, is to get out the market. Just sit on the sideline. Don't pull your money out of the account. But just let it sit. Let it sit, say in cash or maybe money market or something like that. And anything more than that would be a higher level of risk. But you can, if you're comfortable and knowledgeable, you can invest in something that will go up. But you got to find what you want to do. I think the worst thing to do would be to just keep everything where you had it when it was going up, when the market was going up. Because generally speaking, the stuff that was rising when the market was going up, generally speaking, those things tend to come down, be the things that's falling. There are some exceptions to that, and I'll be talking about that in the weeks to come. Um, slowly, but we do the deep dive in the Patreon. I'm seeing at the bottom it says U.S. oil inventories rose by 4.5 million barrels last week. We do not have an oil shortage, y'all. We have an oil glut. We have an oil glut, and the inventory rising is bad for the price. So the complaining that everyone was doing about the price of oil and all that's going to be over. That's going to have a serious correction. We're not gonna have that problem for much longer. You know, but unless you got something else, Lionel.
No, I don't have anything else.
Okay, well, thank you, Chris Mo. Everything is everything. But again, just to wrap up, everybody, you're looking here. You're looking here, and you're looking at. You can draw your own trend line. This thing is killing me. Trying to move this. My chart is like slow in this one. So you want to put your little trend line there. You can go to investing.com and you can use charts for free. You can go right here and get this little line right here and do just what I did. As long as we stay above that line, we're happy. But I don't, everything should be, pretty cool. But I don't think we're gonna stay above that line. That's the problem, you know. And we got here. Let me see how this. We had a head and shoulders pattern that was looking at. Let's see if that how that looks. I'm gonna close this one out. See if it's still holding. Because what we got here is we hit this high here on the first, which was Monday. Okay. And then we made a lower high. And I would say this is what I saw this morning, which caused me an alarm, caused my concern. I said, okay, I know I'll be going live today. I made this decision this morning. I think the price was somewhere here, but when I saw this, I said, okay, I'll be going live today. And this is called a head and shoulder. So that's considered the left shoulder. Think of this as someone's left arm, and this is the shoulder, and this is the coming around the neck. what you call this? The shoulder going towards the neck. Okay, then you come up to the head. That's the head. The highest point is the head, and then you come down the neck, and then this is the right shoulder, and think of this as all like the right arm. Now, as long downtrends make lower highs. So this was the high, then we made a higher high. Then we made a lower high. Now the good news, now when we made this higher high, we took out this low, which was important. Okay, um, so when we started coming down, we took out this low. So that means we made a lower low. And so when we got here, the question became, will we make a higher high to keep the trend going? We failed. Did not make a higher high. Okay, but it didn't make a lower low. So now we got this move. Say, is it going to go make a higher high? Uh, the fact that this particular candle has a small body, that means the bulls and bears are in a fight. This is looks almost like a pattern called a doji pattern, almost, and it means that the bulls and bears, like half is bullish, half is bearish, but in the bigger picture, it must make a higher high in order to be considered bullish. Okay, so we have a range here defined by this high and this low, and either the price is going to go higher, which is bullish, and it'll be great news for the optimists, or it's going to go lower than this, which would be bad news for the pessimists. It'd be bad news because it'll be the third high, and the second one that's lower. This is the highest point, the first lower high, second lower high, and if we go lower than here, it'll be the second lower low because this low was lower than that. And if this low comes down and is lower than that, then we'll be sitting right near this trend line. And once we break this trend line, um, then we will have really cease to be going up. But then this becomes the most critical. So it's like dominoes. It's a series of dominoes. You learn about how the dominoes are set up in technical analysis, and you can watch the dominoes fall one at a time, and so you have lots of time to get out of a trend. So when people say, nobody knows the top, and technical analysis doesn't work, nobody look, we don't have no crystal ball. We never said we were swamis or anything like that. We never said we could pick the exact high, but yet the people that criticize technical analysis, they create what do you call that? When somebody you arguing and they make up something you didn't even say. I don't know why I can't think of that. When they try to say you said something you didn't say. What is that? What's that called? Let me see if anybody watch. I forgot what that's called. Duh. But anyway, you get the point. So we can't necessarily guess the exact top, but we can notice when the trend is is doing things that are uncharacteristic of an up move. Okay, of an up move. So this what we saw here. We see here is a series of lower highs. So this green candle, it didn't go higher than that. This green here doesn't even look like it's going to go higher than that. And I'm making this very simplistic and basic. Okay, it goes deeper. Okay, but that's for Patreon. So you gotta put in some work. To really get it. It's not. It's something that has to be studied, and then it's something that you have to watch over a period of time, so that you learn what these signs are, so that it becomes kind of second nature to you. But that's the summary, and we're out of here. What is Sophie? Sofa. I'm gonna look that up. I'm gonna look that up. Misrepresent. No, that's not what I'm. No, what's that? What's that I'm talking about? In debate, when somebody says, when they like mischaracterize what you say and say that that's your argument, and you go, "I never said that." I never said that. I don't, as soon as I stop this, I'm gonna know. I'm gonna figure out. I'm gonna go. Oh yeah, that's what everybody knows what this is, what I'm talking about. But that's the way that I would say fundamental traders misrepresent what technical analysis is. It's not so much that we can guess the exact top or the exact bottom. We can recognize the signs of trend exhaustion, okay, and the signs of reversal. That's what we're looking for. We're not actually even trying to predict the exact bottom. We're looking at an area, and then we're looking at the for the price to behave in a certain way when it gets to that area. There are common levels that prices decline to, and there's a way that these squiggles mean something. Put it that way. These candle sizes and the squiggles, they have meaning. And in technical analysis, you learn what a picture of a reversal looks like, and then you learn, and as a result, you learn how to protect your money. But I'm gonna shut it down. Thank y'all for rocking with me. Stay tuned for other constructive information to keep you to talk you off the ledge. Okay, all right. So somebody's making money somewhere. Okay, keep that in your mind. Somebody's always making money somewhere, and because you see red everywhere on TV, when they put up the stocks in the market, it doesn't mean that everything is falling. Okay, it means that most things are falling. Okay, um, but there's a sector rotation going on. Money is leaving, so that red is showing you where money left. It's not showing you where the money is going. And so, when it's obvious that the world is that the markets that the stock market, meaning the S&P and Dow for the most part, is red or bloody, I'll be here to show you where it's green. Where it's green. All right. Peace, y'all.